BTCI has attracted over $800 million in assets, with distributions exceeding 25% annually. But how this fund makes money is different from what most investors expect. Tell me in the comments which fund you want me to analyze next. BTCI is the NEOS Bitcoin High Income ETF. It makes money in two ways. One, trading options on Bitcoin futures ETFs. And two, owning Bitcoin exchange-traded products. The fund launched in October 2024. It pays monthly distributions, has approximately $850 million in assets under management, and since inception, it's returned about 58%, which is huge. Here's what makes it different from other Bitcoin ETFs. The majority of your money is not going towards owning Bitcoin. BTCI has clearly articulated their investment strategy. Quote, BTCI aims to harness the high volatility within Bitcoin's price to pursue high monthly income and upside appreciation. The key phrase there is high volatility. BTCI is fundamentally an options trading operation that profits from Bitcoin's wild price swings. If you look at the source of earnings for BTCI, it is approximately evenly split between gains and losses on investments and written options. Some of those investment gains are actually from long call options the fund holds. Interest income is about 8%. The fund uses synthetic long positions without actually owning Bitcoin. Less than 25% of the fund's assets can be held in direct Bitcoin holdings, which appears to be mandated by the fund's prospectus. Quote, Cayman subsidiary, the fund expects to gain indirect exposure to the spot Bitcoin ETF ETPs by investing up to 25% of its total assets, measured at the time of investment, in the subsidiary, consistent with the limits of the U.S. federal tax law requirements applicable to registered investment companies. There's nothing sinister here. It's just how the fund is structured. But it does mean if you want to own Bitcoin, BTCI really isn't doing that for you. A maximum of 25% of your assets goes to own Bitcoin itself through Bitcoin ETFs. Mostly what you are betting on is the option trading prowess of NEOS fund managers in the Bitcoin market, which is still a new market in my view. This is why I see BTCI as being higher risk and more speculative. You are essentially staking management at the poker table in a new market of a single asset that produces nothing. BTCI has tried to manufacture a covered call-like fund around Bitcoin. In reality, it seems to be more of a Bitcoin options trading fund with some Bitcoin holdings. And this causes a problem that I think isn't obvious to investors at first glance. There are several obvious issues I see with BTCI. It's not diversified, most of your money is going to options trading, not Bitcoin ownership, and you're paying basically 1% MER. The issue I see less talked about is built into BTCI's strategy itself. Volatility is how much and how quickly an asset's price tends to move up or down from its average over time. Volatility can decline even if the price of Bitcoin is going up. See the problem? Since most of the profits of BTCI are coming from options trading, and the profitability of the options trading depends on the high volatility of the Bitcoin market, then you as an investor are not actually betting on the price of Bitcoin. You're betting on the volatility of the price of Bitcoin. And those two things are different. The price of Bitcoin can increase over time, but the volatility could decrease. I know people love Bitcoin. It's hard not to when it's up over 50% in the last year and nearly 700% over 5 years. Here's the problem I have with Bitcoin. You don't own anything. When you buy shares in Apple, Microsoft, Nvidia, Coca-Cola, McDonald's, or an S&P 500 index fund, you own something real. You're a real owner of a piece of a real business. Businesses can get better. They can change what they do and how they do it. Bitcoin can't. It's purely speculative. The price increases because the last person who buys pays a higher price than the one before. And they pay that higher price because they expect the price to go even higher. It is important for investors in ETFs like BTCI to hold this in the front of their mind when considering making a purchase. The income you derive from BTCI is coming from people speculating on the price of Bitcoin and the skill of NEOS management to trade options off the volatility that speculation creates. Has it been very profitable? Absolutely yes. They've done a great job. But that doesn't change the fundamental nature of what you're betting on. Long term, throughout history, the most reliable way people have been building wealth is by accumulating ownership in a profitable business and retaining that ownership. Even if Bitcoin is the new digital gold, let me ask you this. How many billionaires out there actually made it from owning gold? Exactly. In conclusion, if you want direct Bitcoin exposure, pure Bitcoin ETFs exist. And if you're considering BTCI, understand you're betting mostly on an options trading fund that profits from Bitcoin's volatility. I hope this deep dive has been helpful. Tell me in the comments which fund you want me to review next and I'll do it. I read every comment. Hi, I'm Charles. I don't like most investing and finance content I see online. It's typically designed to sell you something. You don't need to buy anything from me. This content is for educational and entertainment purposes only. Seek professional advice for your situation. I want to make financial freedom accessible for the average person. Profit is desirable, ownership is freedom. Good luck and goodbye.